Limited liability corporations are a cross between partnerships and corporations. Like partnerships, each member shares the tax bill and reports company gains and losses on their personal tax return. Like corporations, the business is regarded as a separate legal entity to its owners. Any LLC that has more than one member is considered a partnership. As with any partnership, the members are paid out of their share of the company's profits. Each member's tax responsibility shows on their personal tax return. Members of multi-member partnerships receive guaranteed payments. These resemble salaries but are treated as payments for services. They are guaranteed because each member will receive a payment no matter how well the business is performing. If you are part of a multi-owned LLC, there are 3 things to consider when it comes to getting paid. 1. Is the LLC adequately capitalized? Consider all the other expenses that need to be covered after everyone is paid, some of which will no doubt include employee benefits, employee training, inventory, supplies, and/or equipment and debt payments. You must pay your employees. Whatever other expenses need to be covered, including your own pay, employee compensation has to come first. How much you and the other members receive will be determined by the business's profitability and how much is left after you have accounted for all other expenses. If the company's making good money and is able to cover all expenses after employees' salaries, then the members can take a larger share of the profits as an income. If the business has been less profitable, members may need to take a pay cut. Whatever the size of the members' paychecks, make sure there is enough left to grow the business and increase its operational efficiency. 2. The payment method in accordance with the LLC's operating agreement. Every multi-owner LLC should have an operating agreement. Among other things, the operating agreement details the financial and operational relationship between the members of the LLC. This may include how money is distributed to each owner. The distribution methods will depend on whether there are set proportions, or if a vote is necessary, if there's a payment schedule, and so forth. It is important that the rules are determined in advance, and once agreed upon, the members adhere to it. 3. Is the LLC taxed as a partnership or an S-corporation? How the LLC is set up will determine how you and your fellow LLC members are paid, and how the business is taxed are some of the most common questions before setting up multi-member LLCs. If the LLC is a C corporation and you work for the business, you can receive a salary, or a paycheck, or a distribution. If you are simply a shareholder and not actually working for the corporation, you will receive a dividend. Members of LLCs are taxed as employees and pay FICA tax. One of the hallmarks of a C corporation is double taxation. The corporation pays tax and whatever profit the business makes is also taxed through member incomes. As with C corporations, members of S corporations receive FICA-deducted salaries if they actively work for the business. The main difference is the S corporation is not double taxed. The reasonable salaries members receive can be distributed via payroll if the members choose, but they are taxed at a different rate. When determining how much you should be paid, take into consideration your value to the company. How hard would it be to replace you? Also, compare yourself to others in similar positions doing similar jobs. How much do they make? Ensure this is an apples-to-apples comparison, accounting for business size, location, and industry. In an LLC, all profits and losses are passed from the business to each member. Members report profits and losses on their personal federal tax returns, just like the owners of a partnership. Therefore, members can pay themselves by taking a distribution of their portion of the profits. This amount is reported as part of the Schedule K-1. You'll need to pay taxes on this amount on your personal income tax returns. Sometimes, an LLC may elect to be treated as a corporation for tax purposes. When that happens, you could get wages from the corporation rather than a distribution. That distinction can get thorny, so be sure to check with your tax advisor to see how your LLC is treated. IncFile is a company that offers a free tax consultation and filing service. Using IncFile, you can also set up your LLC, corporation, or nonprofit organization. Watch the rest of the video to know more about their tax consultation and LLC formation services. Now, let's talk about to form an LLC, and that is hiring a professional formation service. Professional formation services do all the steps you should be doing on your own, from filing necessary forms to acting as your registered agent. You usually have to allocate a specific budget for this option. As I already mentioned earlier, InkFile is one of the best companies out there to help you form your LLC. You can click on the link in the description to get access to this deal. InkFile is one of a kind, as it offers a free package with services such as preparing and filing your articles of organization. Well, you still have to pay $237 for the state fees, which you would have to do anyway if you chose the DIY option. But looking at the bigger picture, all other companies will still charge their service fee on top of state filing fees. InkFile does not collect this fee. This plan already includes a free registered agent for your first year of subscription, and $119 annually moving forward if you decide to continue the service after the first year. InkFile's next packages are the Gold and Platinum packages, which both have package fees already on top of the $237 state fee. Each package has its own set of services which are all worthy of the subscription you are paying for. The Gold package offers you the benefits of filing reports and taxes for your LLC. Every year, USA LLCs are required to file a state annual report. This report is essentially an information update of your file so that the state knows who is now in charge and how to contact your company. USA LLCs are also required to file state tax returns. To make matters even more complicated, your annual report and business privilege tax share a document and are due at the same time each year. With the InkFile's Gold package, you won't have to scribble notes of these reports because InkFile will handle the whole process for you. Your Platinum package also has these services in the bag, with the unique addition of expedited filing, getting a domain name, and a business email, which essentially increases your LLC's credibility. InkFile also has an exclusive partnership with Bank of America, so you can easily open an eligible checking account for your business. Yes, it is a must for your LLC to have a business account. Remember, an LLC has limited liability, for it is a separate entity from its members. You may forfeit your liability protections if you combine your personal and business money, and this is where the term piercing the corporate veil comes into play. Piercing the corporate veil is an LLC jargon that refers to the court's action to hold you as the owner or member of an LLC personally liable for the LLC's debts or actions. Now, if you have been sued by some lawyer who sees a crack in your LLC, they might resort to piercing the corporate veil, in which you are in any position defeated. This is why opening a separate bank account for your LLC is so important. Do you like the level of detail I'm providing you in my review so far? If yes, then make sure to let me know by liking my video and hitting that subscribe button for more high-quality business content.